Hi, everybody. It's Jessica Stone at Stansberry Research, and I've reached Todd Pierce, who's a former Goldman Sachs trader as well as a current portfolio manager for MNS International. We reached him in Colorado because, Todd, you're seeing a lot of new investors coming into the market. What's your rationale for why that's happening right now?
There's a couple reasons. First and foremost is obviously the COVID situation. People are stuck at home. They're looking for something to do. They're seeing that their neighbors are involved in the markets. They're making some money. So they want to get involved as well. A lot of them are using the Robinhood app, which has been around for a little while, but really only popularized in probably the last year or so. And on it, they're able to just buy and sell shares with a click of a button on their phone. And they can even go so far as to buy fractional shares. So they can invest in names like Amazon or Tesla or stocks that are even over, call it over $1,000. They can buy their fractional shares and still be involved and basically go and tell their friends and their family, hey, I own a share of Tesla.
Which probably would be really great to be able to say at a dinner party, but they're having to do it on a Zoom call instead, right? And maybe they're actually buying Zoom for that matter. What would you say the impact on the markets is, though? Because you've watched the markets from a front row seat to the financial crisis on Wall Street. There are definitely people out there who think the impact of the Robinhood app and sort of newer investors who don't have a lot of information on how to invest, that it's not going to end well. What are your thoughts?
Well, I think that is correct. Literally in the last few months, I've been getting calls from friends, from family, from neighbors, from friends of friends that are trying to figure out what to do with the market. They're trying to figure out where to put their money. And they're even calling me and saying, hey, what are options? How do I trade options? Which platform's the best platform to trade on? In a straight up market like we've had the last 2 months or so, where the market's up 35%, almost in a direct line off the bottom, retail investors tend to do very well. I would say, call it 99% of retail investors will be long stocks. So it's not super surprising that they will throw caution to the wind and be speculating and buying on the way up. If it's working today and it's working tomorrow, well, I'm going to do the same thing, the other 3 days of the week. The tough part for retail investors will be if and when the market starts to chop back and forth. So if, similar to earlier this week, you have the market fluctuating, going up and down, call it 5% in a given day, and they're generally always long stocks, that's going to be the true test for them. And it is somewhat difficult for retail investors to really be long both on those down moves and the up moves. Generally, they're going to be long on those up moves and really bleed out some money on the down moves or a sort of a chop sideways.
Are you seeing signs that that these investors are part of creating a bubble?
I am. We've said multiple times in the past, people out there will say, oh, this time is different. In 2008, we saw the housing bubble, and the last people in were the speculators. And I think we know how that ended. A few years ago, we saw, at Thanksgiving dinner, the big topic du jour was Bitcoin. People were asking, what is Bitcoin? How do we get involved in Bitcoin? And Bitcoin ran up to 20,000 and is now back somewhere below 10,000, depending upon the day, down over 50%. And even as recently as probably about 2 months ago in oil, people saw that oil was down to $10 a barrel, and they thought, hey, this has to be the best time to invest. Unfortunately, they didn't know how all the systems and the mechanisms worked. And on a monthly mark, oil closed at negative $37 a barrel.
Not actually a good time to get into oil.
Yes, so you are seeing signs of huge speculation and people getting involved in markets they don't fully understand. To me, typically that does show it's a sign of a top. One of the other sort of repercussions, or the other side of it, is that the trading desks that take the other side of these trades have to go out and hedge that risk each and every night. Now, a lot of those banks, or we call them broker dealers, are only about a third or a quarter staffed right now, and they don't want to be holding risk overnight given that the market is so volatile. So a lot of times you'll see these huge swings literally in the last 30 minutes of the day, and that's those desks going out and hedging their risks so that they can come in the morning flat.
So what do you tell retail traders? I know you're not one of them, but what do you tell them then about how they can be better at it if they want to stick with it, if they sort of like the highs and riding the roller coaster, as you seem to like to ride it? What's your recommendation to them?
So the best thing I can say to them is either find a financial advisor that suits their needs, or find a trading publication or an investing publication, even something like Stansberry. I mean, I've followed Stansberry for quite some time. They have an excellent product, but just something to teach them the ins and outs and the basics of trading, sort of the rise and the pitfalls, so that they don't get caught on the wrong side or they don't understand something if the market does move against them. And they can, continue to do what they're doing, but just have a little bit more knowledge behind it.
All right, Todd Pierce, thanks so much for your perspective. We appreciate you lending us some time today. And if you would like to see much more content just like this, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. That's all for now. Thanks for watching.